Today, I want to talk about what happens to bankers in China when they commit crimes. They don't get let off the hook with a small fine, their punishments are much, much worse. I also want to talk about how brokers and trading platforms are still having an absolute nightmare delivering AMC settlement shares. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, you can see from the title of this article, punishments in China are much more severe. It says China has just executed a former top asset banker. It says Chinese CCTV media says this former top asset banker was executed just weeks after being sentenced to death for taking extremely large bribes as well as for bigamy. It doesn't state how he was executed, just that he was sentenced to death for taking extremely large bribes and showing extremely malicious intent. In China, when bankers take bribes to do something malicious to a stock, they don't just get let off the hook with a small fine and a slap on the wrist, they get the death penalty. While I do think this is a step in the wrong direction or just a step too far, it definitely deters bankers and shorts and hedge funds from committing illegal crimes. When the punishment for illegally manipulating companies is a small fine of a few $1 million and a slap on the wrist, it's pretty much asking you to manipulate those companies illegally because there is literally zero punishment. But when those crimes are punishable by death, I bet those bankers and those shorts think twice about doing anything illegal. He was a former chairman of a state-controlled asset management firm created in the 1990s. He was accused of amassing or seeking to collect $260 million over a decade for favours. So importantly as well, this guy wasn't just a small no-name employee at a small no-name hedge fund. He was a top dog, a former chairman at one of the biggest state-controlled asset management firms. So it seems, unlike in the US, the Chinese regulators actually go after the biggest guys at the biggest firms. They don't just give slaps on the wrists and fines to companies you've never ever heard of, they go after the top dogs. And they don't just go after them with a small fine, they go after them with the death penalty. And it says under the crackdown which begun in 2012 under Xi, hundreds of officials at government entities have been snared, including a former head of China's insurance regulator. So it seems even in China, even the regulators are committing illegal crimes, or they were until China reintroduced that death penalty. And on top of that, Chinese courts have a conviction rate of over 99%. So if you are caught doing anything illegal in China, you're pretty much guaranteed to receive punishment for it. As I said, while I do think the death penalty may be a step too far or a step in the wrong direction, I do think the US, especially the US regulators, need to take a page out of China's books. If the punishments in the US were significantly more severe, bankers and short sellers would definitely think twice about doing anything illegal. And if the death penalty was introduced in the US as well, I imagine crime rates in the stock market and on Wall Street would fall to zero pretty much overnight. Over on the flip side, in the US, the SEC has actually charged 5 advisory firms for client custody rule violations. It says the SEC today announced charges against 5 investment advisors for failing to comply with requirements related to the safekeeping of client assets. Now this is actually really interesting because it basically means these firms weren't keeping an eye on client assets. Maybe they were being lent out for the wrong reasons. I imagine that many of the brokers, trading platforms and asset management firms are definitely not safekeeping client assets appropriately. As a prime example, which I'll touch on later, these brokers and trading platforms are still having an absolute nightmare delivering the AMC settlement shares. And some users have even been receiving over allotments of shares, aka their broker has given them too many shares which shouldn't actually exist. As the Ape accountant tweeted, they said it looks like my AMC shares have still not fully been delivered by Cash App. This user posted yesterday an email chain with Cash App saying thanks for the response, but it does not look like I've received those shares yet, almost a week late. So I'm just confirming you completed the dividend or if it's still in progress. Cash App support replied saying thanks for following up. The AMC dividend is still in process. As a reminder, this was supposed to be done and completed last week on Monday, August 28th. But still on September 5th, September 6th, it was still uncompleted over on Cash App. And the patient ape has just received a notification from Webull saying that he was actually accidentally given an over allocation of AMC shares. He received a message from Webull support titled over allocation of AMC shares. It says, "Dear valued client, please be advised that your account should have received an over allocation of AMC shares due to an issue with the processing of the recent corporate action by our clearing firm, Apex Clearing Corporation. Your position in AMC shares should be corrected overnight." Basically, Apex Clearing just delivered to its customers more settlement shares than they actually should have. They delivered more settlement shares than was given to them by the DTCC, and they delivered more settlement shares than should actually exist. As I said in previous videos, this is a major issue where brokers and trading platforms aren't delivering real shares, they're delivering fake IOUs. These are simply placeholders put into your account, whether it's too many shares, too little shares, whether they've been placed there too early or too late, it doesn't really matter. The important thing is these aren't real AMC shares, just simply placeholder IOUs. Again, it proves these brokers don't have the shares they need and they are still having to go into the market to buy actual real shares. And that's also likely why they're desperate for AMC to issue these 40 million new shares, including the over-allotment, so they can actually give their customers the shares they need. And until AMC completes that offering, these brokers are on the hook for all of the IOUs they issue. And again, it seems CNBC is still trying to scare you into selling your AMC shares. They posted this interview or this article saying even Taylor Swift can't save the theatres, saying to grab your popcorn and watch two CNBC presenters break down what's going wrong with AMC. As I covered in my previous video, yes, it's bad for the shareholders, for the mother of all short squeezes, but it's actually great for AMC as a company wanting to become more successful and profit generative. Troy Goldberg has tweeted saying the mainstream media saying that AMC is losing money hand over fist is a massive red flag emergency, saying he knows that AMC has been steadily improving quarter over quarter, and AMC's positive EPS and positive profits last quarter means this company is actually making money, not losing money. Especially as the next quarter is going to be even more profitable, quarter 3, and quarter 4 is likely to be even more profitable than that with Taylor Swift's new concert, saying this is what gives the apes strength when CNBC comes out with dumb, blatant lies. As Dave Murphy tweeted, he said the current share price just doesn't make sense. AMC is on the back of record sales, a new line of business which puts AMC on the battle lines of distribution and posting its first profitable quarter since 2019. But saying with all this positive news, AMC Entertainment has now somehow hit a new 10-year low, even lower than peak pandemic times when AMC had zero revenue. He said, here's an article from January 5th, 2021, when AMC reached its then all-time low of $10 per share. Adam Aaron stated AMC's situation in a nutshell, saying since theatres closed, our revenue went to zero overnight. But AMC is now trading at a new all-time low, $2 or $2.56 per share than the previous low. Even though AMC is setting new concession and attendance records, has new revenue lines, and is generating profit for the first time in over 4 years, AMC's share price is still lower than in 2021. Right now this doesn't make sense, but as I mentioned in my previous video, as AMC's profits improve even more and AMC generates billions of dollars in profits per year in the future and becomes debt-free, AMC's share price will have no choice but to hit new all-time highs. The reason why AMC's share price has still been falling is because, as Jay House tweeted, these shorts have been funneling buy pressure off into various channels, then pressure you into selling when the price is manipulated. He said it's a game of chicken, but these shorts can't hide the money forever. He said APE is still trading, people still haven't received their settlement shares, and AMC spent 51 days on the regulation SHO list. This proves the shorts are still manipulating AMC lower and lower, but it's ultimately a game of chicken that the shorts cannot win because they cannot hide the money forever. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.